Okay, now for requirement 3, what I've done here is gone to a third flip sheet and I've put in the T accounts for all the accounts that we are using. What I've also done for each of these T accounts, I've put in the beginning balances. Now the beginning balances are those balances given in the problem that are as of June 30th, 2010. Those June 30th balances become July 1, 2010 balances. We go from June 30th to July 1. So they become our beginning balances, and then our transactions, which we recorded in the previous lesson, are all recorded in the month of July. So we start out in our T accounts with our beginning July 1 balances for each of the accounts that have a balance at July 1. Again, we get those balances in the problem as the June 30th balances. And in addition, we show the balance either on the left side of the account or on the right side of the account, depending on what type of account it is. Again, assets are debit accounts, so all of the asset beginning balances are debits, and liabilities and equity are credit accounts. So all of the liability and equity beginning balances in the liability accounts and equity accounts are credit amounts on the right side of those accounts. And again, this takes a little bit of time before you understand the logic involved. At first it makes absolutely no sense, but as we move forward and the more you do it, the more it'll make sense. I promise you. Okay, so we have our beginning balances in each of our T accounts, and we also have our 5 transactions that have been journalized in journal format. So for requirement 3, it says to summarize the journal entry effects from requirement 2 using T accounts. So for each of these journal entries, we need to transfer those amounts or post them from our journal into, not our ledger, but into our respective T accounts. The way we do it is individually, one at a time. So our first transaction is to debit cash, credit contributed capital for $400,000. So we debit with a left side entry, transaction A, debit to cash, 400,000, and credit with a right side entry, 400,000 to contributed capital, transaction A. Our second entry is a debit to cash, credit to notes payable in the amount of 90,000. So again, we debit, add to cash, transaction B, 90,000 on the left side, and add to notes payable with a credit on the right side, transaction B. Our third transaction, notice for each transaction, left side, right side, equal. Debit, credit, equal. Transaction C is our, actually it's called a compound entry. An entry or transaction that affects more than two accounts, called a compound entry. We debit factory building for $182,000. We credit cash for $82,000, and we credit notes payable for $100,000. So we go to factory building, and that's transaction C. We want to debit $182,000. We have a credit. We're subtracting from cash for that cash payment. We credit cash for $82,000, and the balance was in addition to notes payable, a liability account in the amount of $100,000. In transaction D, we bought equipment for cash. We debit equipment, credit cash $200,000. So we add to equipment with a debit. Transaction E, $200,000. And again, we credit cash for the cash payment. $200,000. Again, left side, right side equal. Debit, credit equal. And our last transaction that we need to post to our T accounts, transaction E, we bought supplies on account, debit supplies, credit accounts payable, $30,000. So we want to add to supplies. You know, I believe I used the wrong letter here for this $200,000 entry. That was transaction D. I showed that as E. So I'm going to change those two letters to D. And transaction E, we are adding $30,000 to supplies with a debit, and adding $30,000 to accounts payable with a credit. Now, as part of the summarization of our T accounts, we need to show the balance for each of our accounts. The way we get the balance for each account is for cash, as an example. The plus side for cash is the debit side. We add to cash with debits, we subtract from cash with credits. So we add both sides. We add the plus side, we add the minus side. So on the plus side we have $426 plus 90, 516. On the minus side, we have 282. We total each of the two sides of the account, and then we simply subtract those two totals to get the balance in the account. So our balance of cash is $234,000. Now I'm going to do this for each of the accounts and calculate the balances and write them in on the T accounts. And then I'm going to come back for a last lesson segment to finish up this problem.